Okay, let's go.
You can memorize every chart pattern, master every technical indicator, and backtest your strategy for months, and still watch your account balance slowly bleed out. An unmanaged mind turns market volatility into a destructive force for your capital. Today, we are going to fix that. We are going to build a personalized, three-part daily trading psychology system, drawing directly from Brett Steenbarger's framework in Trading Psychology 2.0. Before we start, you need two tools. Grab a dedicated notebook, physical or digital, and a pen. We are going to put these to use right now. Transitioning from an amateur gambler to a professional trader requires trading mental discipline as a measurable operational system. The trading routine begins before you look at any charts or news feeds. This is the first pillar of the system. Open your notebook. The first entry is your primary intention for the day. You might write, focus on quality setups over quantity. Right below that, define your identity statement. I am a calm, process-focused trader. Most retail traders wake up and immediately open their brokerage app, letting flashing red and green numbers dictate their mood. This reactive habit puts the trader on the defensive. An elite athlete always warms up their muscles before stepping onto the field. As a trader, your mind is your muscle, and this 5-minute mental priming is your non-negotiable warm-up. Stating these intentions aloud shifts your brain from a state of emotional anticipation to one of logical execution. Writing these two sentences creates a logical baseline for your day. When the session begins and price starts to move, you have a predetermined set of rules to return to, making you less likely to act on a fleeting impulse. You will experience moments where your heart rate spikes or you feel an urge to revenge trade. This is the beginning of an emotional hijack. You need an emergency brake. This requires you to physically push your chair back and look away from the screen. Inhale for 4 seconds, hold for 4 seconds. Exhale for 4 seconds, hold for 4 seconds. This breathing pattern sends a signal to your amygdala to disengage from its fight-or-flight response. Once you finish the breathing cycle, look back at your screen and ask one grounding question out loud. Is this decision based on my plan or panic? Your ability to regulate your physical and emotional state determines whether you can save a failing trade. The trading session ends only after you have closed the terminal and opened your psychology journal. Use the 3P method to evaluate the session. Did I follow my process? How stable was my psychology? What is my preparation for tomorrow? Grade your day using performance mapping. This creates a visual record of your behavioral patterns over time. On a green day, you followed your rules perfectly and maintained your composure. This green grade applies regardless of profit or loss. Conversely, on a red day, you traded on emotion and ignored rules. This remains red, even if a reckless trade made profit. Many traders fail because they judge their success solely by their P&L statement. This ignores the quality of their execution. Tracking internal behavioral patterns creates a self-coaching loop. Over time, this focus on process over outcome leads to long-term mastery. You have now built a 3-pillar system: the pre-market anchor, the mid-trade break, and the post-market debrief. You are now operating as the manager of a professional trading business, rather than someone simply reacting to market noise. Long-term consistency in the markets depends on a strictly maintained state of mind. Mastery of this daily routine turns your mind into your most reliable trading indicator. If you are ready to build this discipline, like and subscribe for more. Check the description to request the full Trading Psychology 2.0 ebook via WhatsApp.